October 10th, 2025, a day that will go down in history as the moment when one single statement from Donald Trump wiped out $19 billion from the crypto market in just a few hours. Picture this, Bitcoin crashed from $120,000 down to $100,000. Altcoins dropped by as much as 80%. And all of that housed because of just 3 words: 100% tariffs on China. Let me tell you a real story of what actually happened. Let's start with the numbers, the scale of this real crypto apocalypse. Bitcoin crashed 10% in just few hours, from $120,000 down to $100,000. Ethereum dropped 24%, Solana completely collapsed, down 31%. But that's not even the craziest part. Total liquidation across the market exceeded $19 billion. Do you realize what that means? That's largest wave of liquidation in the entire history of crypto, and the wildest thing about it, it all started with one single tweet from Donald Trump at 3:30 p.m. time. Within minutes the entire market turned into a bloody massacre. People were losing their entire deposits, having no idea what was even happening. And now pay attention, here are the exact words that cost investors $19 billion. Trump tweeted, starting November 1st, 2025, a 100% tariff will be imposed on all goods from China. The trade war is just beginning. And the market just exploded. You get it? One single statement and billions of dollars vanished into thin air. But hold on a second. A lot of you are probably thinking right now, wait, what does crypto even have to do with trade tariffs on China? Isn't Bitcoin supposed to be a digital gold, a hedge against politics and traditional markets? Yeah, I used to think the same way, but the truth turned out to be a lot more complicated. Here's what actually happened and why crypto reacted so violently. First, China controls about 65% of Bitcoin's mining power, so now tariffs hit the entire mining infrastructure directly. Second, a trade war triggers a risk-off sentiment. Investors pull money out of risky assets and move into safe hands. Third, the US dollar instantly jumped 2%, and whenever the dollar strengthens, crypto usually dumps. And fourth, algorithmic trading bots kicked in, triggering a chain reaction of stop losses and automated sell-offs. So yeah, Bitcoin isn't that independent, untouchable asset we once imagined. It's now fully tied to the global financial system, with all its hows and vulnerabilities. Now let's break down how this crash actually unfolded, minute by minute, because understanding the mechanics is what helps you be prepared next time. Phase 1, the first hit. At 3:30 p.m. Trump posted his statement. By 3:35 the first wave of selling offs begins. Bitcoin drops to 118,000. At 3:35 it breaks the key support level at 115,000. And by 4 p.m. full-blown panic sets in, mass liquidation of long positions start flooding the market. Phase 2, the liquidation avalanche. Most of the long positions were opened between 112,000 and 115,000. Once price broke below that zone, a chain reaction of forced liquidation kicked in. Just imagine, in 30 minutes over $12 billion worth of position were wiped out. Exchanges couldn't handle the traffic. Lags everywhere, platform freezing, people couldn't even log in into their accounts. Only my lovely Bybit was worked as usual. Phase 3, total capitulation. Bitcoin breaks through the psychological barrier of 110,000, and that's when the real panic begins. Altcoins start crashing even harder. Their correlation with Bitcoin is almost 100%, so they follow instantly. By the end of the day, the total market cap had lost more than 300 billion in just 24 hours. An absolute meltdown, the biggest single day wipeout in years. Now let's look at how different players in the market react to this crash, because the reaction was very telling. Starting with institutional investors. MicroStrategy, which holds one of the largest Bitcoin reserves in the world, lost 2 billion in market cap in a single day. Just think about it. $2 billion gone in 24 hours. Coinbase, the biggest US crypto exchange, saw its stock drop 18%. And crypto ETFs record-breaking outflows as investors rushed to pull their money out. Retail traders reacted even more emotionally. On Twitter, the hashtag CryptoCrash instantly went viral. Telegram channels were flooded with panic. People posting screenshots of liquidation, saying they would lost a month's salary in just a few hours. Some even lost much more. But the ones hit the hardest were miners. Mining company stocks crashed 20-30%. Bitcoin's hash rate started to fall as miners began shutting off their rigs. And Chinese miners were in full panic. Nobody knew what would happen to their equipment if the traffic really went into effect. But you know what? This crash is far from the first one in crypto history. And to understand what might happen next, let's compare it to the previous ones. May 2021. Remember when China banned Bitcoin mining? Back then, Bitcoin dropped from 64,000 down to 30,000. That's a 53% crash. It took 6 full months for the market to recover. November 2022, the collapse of FTX. Bitcoin fell from $21,000 to $15,000, a 26% drop, and recovery took almost a year. Now October 2025, Trump's tariffs. Bitcoin fell from 120,000 down to 108,000, only about 10% drop this time. How long recovery will take? Nobody knows yet. But here is the key takeaway. Every single crash has its own cause, but the market has always recovered. Always. The only question is how long it takes, and those who buy at the bottom always end up making the biggest profits. Okay, crash happened. What do you do next? Listen carefully, because what you do now will decide whether you end up in profit or go deep into the red. First and most important, do not panic. I get it. When you see a wall of red in your portfolio, you want to dump everything and forget crypto like a bad dream. But that's the worst move you can make. Panic is an emotion, and emotional skill deposits in trading. I've seen thousands of people sell at the bottom and then kick themselves when price recovered. Second, do not try to catch a falling knife with your entire balance. Yes, prices look tempting right now, and Bitcoin under 110,000 feels like a gift. But remember, the drop can continue. A trade war with China could drag on for months. Trump could add more sanctions. Third, do not take on debt just to average down. I've seen so many people mortgage apartments or take loans thinking this is definitely the bottom, I should add more. That's a path to financial self-destruction. Never invest borrowed money in an asset this volatile. And now here's what you should do. First, assess the damage calmly. Open your portfolio and calculate your real losses in dollars, not percentage. Percentage can fool you, dollars don't. Figure out which positions are critical for your budget and which ones you can hold long term without hiring your lifestyle. Second, if you have spare money that you don't need for living expenses, you can use this opportunity, but carefully. Bitcoin under 110,000 is historically a great long-term entry point. But buy in small portions, spread your entire out over several weeks and only spot trading. No leverage in this kind of volatility. And finally, brace yourself for more volatility. The trade war could drag on. Trump will make new statements. China will respond. And every headline will shake the market. Keep some cash reserves ready in case price drop even lower, so you can take advantage instead of panicking. Now let's talk about my forecast for the near future. And just to be clear, this is not financial advice, it's my personal opinion based on years of market analysis. In the short term, over the next 1 to 2 weeks, I expect sideways movement in Bitcoin, roughly between 105,000 and 115,000. Volatility will stay extremely high with every new headline about tariffs. Trump might add something. China might respond, and the market will move like a roller coaster. Expect fake breakouts in both directions, so don't fall for every candle on the chart. In the middle term, meaning the next 1 to 3 months, everything depends on how the trade war develops. If the tariffs are actually implemented in full, the market will stay under pressure. China could retaliate with its own sanction or restriction, and in this case, Bitcoin might test 100,000 or even deep below. But if the two sides reach a compromise, we could see a sharp recovery back to 100,000 120,000 and higher. The key factor right now is China's response in the coming days. In the long term, over the next 6 to 12 months, I remain optimistic. The fundamental factors for Bitcoin haven't changed. Institutional adoption is growing, ETFs are active and pulling in new capital, and the halving has already done its job. My long-term target of 150,000 and beyond is still on the table. The road there just might be a little bumpier than we expected. The main lesson from this crash is that politics and crypto are far more connected than most people realize. The days when Bitcoin was fully independent from traditional markets are over. Now it's part of the global financial system, with all the consequences that comes with it. So stay informed, but don't react to every headline or politician's tweet. Manage your risk, never invest your last dollar, and always keep a cash reserve. And remember the golden rule: after every storm comes calm. The market will recover, it's only a matter of time. Those who stay calm and act wisely will be the ones who make the most profit in the end. Subscribe to the channel so you don't miss my upcoming breakdown of the recovery phase. Hit the like button if you found this video helpful. It really helps the channel grow. And share in the comments how did you handle this crash and what lessons did you learn from it. And of course, don't forget to get your up to $30,000 bonus with Bybit by the link in the description. See you in the next episode. Take care.